Good morning, everyone. The dollar is generally stronger against the G10 currency this morning, the main exception being the two safe haven currencies, the yen and the Swiss franc. Their gains coming against the background of sharp falls in stock markets on Friday that continued this morning in Asia. The rout in emerging market currencies also contributed to the flight to safety, as most of the emerging market currencies that we track depreciated against the dollar, with the ruble and the South African rand falling again by more than 1%. And the Indian rupee not far behind. Emerging market credit default swap rates were generally wider as well, which suggests that investors are starting to worry about the impact of the FX market movements on the economies of these countries. Gold also benefited from the insecurity, but curiously enough, silver and the other precious metals failed to gain. In the news, Japan's trade deficit in December was narrower than expected on a seasonally adjusted basis, but this was probably due to imports being lower than expected. Exports also missed expectations. While market turmoil may temporarily cause short covering in short yen positions, I believe the fundamentally weak trade position of Japan is likely to undermine the yen over the longer term. For today, the main item in the European agenda is the German IFO survey for January. All the business climate expectations and current assessment indices are expected to have risen from December. Positive sentiment in the Eurozone's engine of growth might be an extra boost for Eurodollar. From the U.S., new home sales for December are forecast to have continued declining, but at a slower pace than in November, while the Dallas Fed manufacturing survey for January is forecast to rise modestly. Not particularly exciting news for the U.S., probably not likely to support the dollar that much. For the rest of the week, the spotlight is going to be on the FOMC meeting that ends on Wednesday. The market expects the Fed to continue scaling back its bond purchases by another $10 billion. There's no press conference scheduled for after the meeting, so initially the statement will be that all we have to go on. Subsequent speeches by Fed officials will therefore be a major point of interest afterwards. Now, assuming that they do decide to continue with their tapering, which is what I assume, I'd expect the dollar to rebound somewhat because there apparently are some market participants who are assuming that they won't continue with the tapering. 10-year Treasury yields are down 16 basis points since the December 18th FOMC meeting. There's also a Reserve Bank of New Zealand meeting the same day. A few economists think they may raise rates, but most don't. For technical analysis and more trading ideas, please see the full comment on our website, IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.